Foreclosures are on the rise in Las Vegas. So it looks like reports of the Las Vegas activity for foreclosures, it looks like Nevada leads the nation in foreclosure filings, believe it or not. Now, if you guys don't know what is a foreclosure, basically this is where an owner of a property is no longer making payments to the mortgage company. Then the mortgage company files an NOD, which stands for Notice of Default. So you will have a 30, 60, and a 90-day. Then at that point, on the 120th day, we'll have a notice of sale. Then it goes on the auction block. Now, it says here that in July, there was one foreclosure filing for every 2,326 homes here in Nevada. Now, I know that may seem a lot, but it's really not as bad as you guys think it is, even though we have all these reports that are coming out. Now, in the Las Vegas metro area, the population is about 1 million people. Now, the rate was slightly better at 1 in every 1,914 housing units. Now, if we take a look from year to date, the first half of 2025, Nevada foreclosure filings, the rates was at 0.21%. Now, this is at 1 out of every 475 homes. Now, compared to the national average is at 0.13%. Now, this is for every 1 out of 758 homes across the nation. Now, I want to take a look at how many foreclosures are currently on the market today, because what's happening is when somebody goes through a foreclosure before the bank takes over the property, right, which becomes a bank-owned property, and it really stands for REO. Now, REO stands for real estate owned. So I went into the multiple listing service to see exactly how many homes have been foreclosed on. And I'm not talking about being on the auction block, because typically what happens is before the banks issues out the 120-day notice for the sale of the property, typically what would happen is the owner of the property will reach on out to like a real estate agent to see if they could actually do a short sale. Now, if you guys don't know what a short sale is, basically what they're doing is they're letting the agent know that I can no longer afford the home, so I want to sell the home. And the agent's job and the benefit to that seller is to do a non-pursuant of deficiency, which means, for an example, let's just say if you owe like $500,000 on a home, but you can no longer make the payments. You got 30, 60, 90 days come along, you're getting these letters. At that point, you know, you're stressed out, you're like, I can't make the payments. Instead of getting foreclosed on where the bank takes back the property, where it just completely devastates your credit, and then when you try to go get more credit, you're not gonna be able to get credit, right? So the strategy behind here, and this is what was happening in 2009, 10, and 11, where we were helping out our sellers in this situation. So what we would do is take on the listing as an agent, then we would negotiate between the seller and the mortgage company. So let's just say now it's $500,000, they can't make the payments, agent runs the comps, and it's worth, you know, $350,000. So we would take on the listing, mark it as a short sale. It would be for $350,000 because that's fair market value at that time. Then a buyer comes along, they're interested in making that purchase. So they submitted an offer. Now, once the offer has been accepted by the seller, now the agent is gonna package up that file and work directly with the bank to negotiate that deal. And that agent's job is to do a non-pursuant of deficiency, which means this. Hey, Mr. Bank, we have a buyer in tow that's going to buy our seller's property, but the property is only worth $350,000 at this time, but we know that he bought it for $500,000 and the negative balance is $150,000, okay? So, hey, Mr. Bank, why don't we just sell this for $350,000 based upon what it's worth? But here's the thing, the reason why we're gonna do this is because if it goes through the foreclosure process and you guys take on possession of the property, it's gonna cost you guys more money. So it's better to go ahead and sell for $350,000. But what I would like to do on behalf of my client is a non-pursuant of deficiency. So which means that if the bank agrees, you no longer owe that $150,000. Now, we used to do this all the time. I'm talking about hundreds and hundreds of clients that we help short sale and procure that non-pursuant of deficiency, okay? But here's the downfall. If you are a buyer, don't think in today's market that you can get rock bottom pricing because it's a foreclosure. It's going through the short sale process. There will always be an asset manager involved, and that bank that has that mortgage has a signed person, which is an asset manager, will take a look at that property and they're gonna see what the current market is. And if the property is in good condition, they're gonna want fair market value. So that's why it's important, just because you're doing a short sale, you're just not giving away your property. And if you're a buyer, sometimes these short sales can take all the way up to 6 months. The downfall is that within the 6 months, the asset manager takes a look at it. You may not even get this deal, okay? And what happens if you waited for 6 months? You agreed to pay $350. Now this has happened before. After 6 months, the market goes up. The asset manager may come back and say, hey, look, it's no longer worth $350 that you want to pay, Mr. Buyer. If you want this deal, now it's worth $400. So now you have to make that decision of a buyer. Do you want to move forward and pay $400K? Because that's what the home is going to appraise for. Because remember, the asset manager, their job is to recoup as much as money they can from that property. Now, so the question is, what does this all mean if you are a buyer in today's market where we're starting to have more and more notice of defaults coming up, okay? Now the advantage here is you're gonna have access discounts, right? So what does this mean to you, like if you're a buyer? Well, it means that you're probably gonna get a discount. So if you sit and wait and you find the right property, you probably can negotiate a really good deal and also closing costs. And the seller may just accept your offer because they just want to get rid of the property. Also, this gives you a potential of higher returns. Now, a lot of flippers will buy these type of properties and they'll typically pay cash, and that's going to be more desirable for the asset manager because the faster that they can liquidate their property and recoup as much as they can move on to the next deal. Now, if you're an investor, this is where you're going to get the steal. The downfall is it could take you a very long time. Now, let's talk about competition on the buying side. Majority of your buyers in today's market, they do not want to wait up to 6 months to get an approval for a short sale. A lot of buyers nowadays, if they buy a home, they want to move within the next 30 days. So if you're looking to buy an investment property or if you're looking to buy a property as a flipper, this may be the direction. Or if you have the patience, this could be a win-win situation for you. Now, what does this mean if you're sellers in today's market and you have a notice of default where you can't make the payments? Well, the problem is that the market is starting to slow down. We have less and less buyers every single month. Properties are not moving as fast as it used to. However, the median price point obviously has gone up. The problem is now that you're competing against every other seller within your neighborhood. And that's why it's very important to work with the right real estate agent to actually get your short sale property sold as quick as possible. But most importantly, you want to get the non-pursuit of deficiency. That's what you want to negotiate directly with the bank. These files can be a little bit complicated. However, if you're working with the right agent that has done these type of deals before, you should be completely fine. Now, I'm just checking on the MLS, which is the multiple listing service. Now, if we take a look at condos, manufactured homes, single family residence, and townhomes, right now on the short sale side, there's only a total of 64 homes that is currently available. Now, if you guys want this list, I'll be happy to send you this list so that way you can take a look at it. Another thing I do want to take a look at is bank-owned properties. Now, when I say bank-owned properties, this is where it's gone through the foreclosure process and nobody ended up buying the property. There was a sales date, went to the auction block, and at that point there was a reserve on the price of the home. Investors didn't bid on the home because it just didn't make any sense. Now the bank has taken back the property, now becomes an REO, which stands for real estate owned. Now typically what happens is they will go ahead and find a real estate agent out here in Las Vegas and they will have that agent list that property on the MLS. So let's take a look at how many bank-owned properties are there today. So again, there's only a total of about 74 homes right now. And I'm looking through this list and some of these homes, believe it or not, are like 5,000 square feet. Okay, the smallest one here is about 936 square feet. Now we've got pricing anywhere from 103,000 and then the most expensive right now is at 1.5 million. So the question is, why do we now have more filings increasing every single month when it comes to these notice of defaults? Well, we have to take a look at our economy. So if we go back to 2008, we had the highest foreclosures, we had the most bank-owned properties on the market. I'm talking about over 18,000 homes. Why? Because if we take a look at our primary sector, our economy is really based upon hospitality. So this is where all the tourists will come and they'll spend their money. So if we take a look at the data, the Las Vegas Visitors Authority, we have roughly about 42 million people visiting Las Vegas every single year. That's roughly about like 3.5 million people visiting Las Vegas every single month. But the problem is here is that the numbers are starting to slow down. And the reason why is based upon uncertainty. A lot of buyers and sellers have no clue what is going on in today's market. Majority of the buyers I talk to, right, they just want to sit and wait. They want to see if the Feds are going to drop interest rates, which Jerome Powell came out and they talked about that they are going to drop rates. But think about this. If they drop rates 2 more times this year, how much is going to drop? Probably about 1/8 of a point. 1/8 of a point is not that big of a savings, believe it or not. It would literally have to drop like 2 to 3 basis points for this market to move. But now going back to tourism. Now, if we take a look, 20% of our tourism has dropped. But the funny thing about it is, I literally had a conversation today with a potential client that was thinking about buying a home out here. He said that his brother came out here last week and he had asked his brother, how is the Las Vegas economy when it comes to tourism? Because he's been watching a lot of these social media stuff that the Las Vegas Strip is dead. Well, that's false information. We've only lost 20%, but if you're having over 3 million people visiting Las Vegas every single month, that strip is still busy. Trust me, I was just out here driving down the strip on a Saturday night. It was literally bumper to bumper. So all this stuff that you guys do see on social media where the strip is dead, yeah, that's like 4 in the morning. But if you take a look from like 5 to like 12, it's just jam-packed busy. So don't always believe what you hear or what you see behind that screen there. So the question is, how does this all really impact the notice of defaults, right? And what could potentially happen? So if consumers don't come out here and they spend money, then it starts to slow down the economy. So everybody that works in the hospitality industry, they start to get laid off. So if they start to get laid off, it's just a trickle down effect. And things start to slow and slow, then housing pricing could potentially drop. But honestly, I don't see the housing market dropping 50%. I mean, I wish it would. It'd be great for all of us, but it would be devastating for most. So another compensating factor that we have to take a look at is actually unemployment. So the city of Las Vegas right now for July, the unemployment is at 6%. The state is at 5.4%. Now, if we take a look at Clark County, is at 5.8%. Overall unemployment nationwide right now is at 4.2%. As you can see, we have to take a look at our economy now. So when the economy starts to slow down, the problem is that people just don't want to spend money, right? This is discretionary income. So the question is, are we heading into a recession? I'm going to say no, but I want you guys to let me know in the comments below. If you guys want this list, let me know. All you got to do is just send me an email or just reach on out to me and just say, hey, Chakits, I would like this list. Matter of fact, what I want you to do is just text me bank-owned properties, okay? And I will have the number right here on the screen. So just go ahead and text bank-owned properties to this number, and we will go ahead and send it on over to you. Other than that, that's all I got for today. I wish you guys nothing but the best, and be blessed, folks.